And if there are some people attending that would not like to appear on the recorded video, let us know, please. And we will slide you somehow. That's not a problem. We're just going to wait 1 minute for people to jump into this digital gathering. It's kind of nice to have a digital gathering again. It's been a while for my part, at least, because I saw, at least in the registration, that there are people from other parts or other corners of the world. And it is very accessible, right? To just jump on your phone or computer and then listen to someone and discussing, and then also joining into a discussion. So I will just start welcoming, and people will jump in as a bit undisturbingly, since we're in this digital room. Welcome to this digital talk with the recent bank failures and the global economic crisis in the background. We gather to question whether the current financial and monetary system align with sustainable and just future that is envisioned by world leaders and us, I guess. Just remember to put yourselves on mute, people. And as I previously said, it's
you muted yourself, I think.
You unmuted me, Thomas.
Oh, yeah, sorry.
Okay. Well, I just mentioned again that we are recording this, so let us know if you don't want to appear on our video. I'm Anna, by the way, and I'm the leader of Rethinking Economics Norway. And we are a movement of several movements that emerged in the aftermath of the previous grand global financial crisis in 2008. As a response to the crisis, a lot of people and organizations demanded a more sustainable economic system, one of the first being Occupy Wall Street, which also sparked interest or inspiration among some Harvard students, some business students at Harvard, who protested against the dissonance, the gap between what was happening in the real world and what they were teaching or learning in the economic thinking at the university, where they actually they left class as a protest, which further on sparked interest in other student-led groups and movements, among others in the UK and in Denmark, who demanded changes in the curriculum, many from the field of economics. And around this time, Rethinking Economics, the international movement, was born. And a lot of these organizations or movements, they said it's not only the world economy that is in crisis, also the teaching of economics too. And this as a crisis that has consequences that goes beyond the university walls, because what is taught for the students of economics, it shapes the minds of the next generation of policymakers, and consequently it shapes society we live in. And in Rethinking Economics, we strive to promote a more diverse range of economic thought. We believe that a pluralistic perspective, it broadens our ability to tackle these many layers of challenges in the 21st century, such as climate change, food security, and financial stability. However, we do not claim that this is the absolute answer or the absolute truth, which I believe is an essential aspect of having a pluralistic perspective. We are, after all, just trying to navigate in this very vast complexity that consists our world. And as we say in the region, the road is made whilst walking, which is also similar to the Zapatista quote, preguntamos, caminamos, walking, we ask. And as we aim to create this economy that is fit for the 21st century, I don't think it's an exaggeration to say that we still have the end of the road is, there's still some time to go, considering the numerous crises that we currently face. It makes it necessary that we ask a number of questions. And one of the overall questions that we raise today is, do we need a banking and monetary system reform to guarantee both financial stability and a sustainable development? And for that, we welcome from Gode Penge, Jonas Fonnesbæk Lodahl, a fintech professional and also a board member of Gode Penge, as I mentioned, who also co-founded Økonomiskolen, which is a democratic platform to teach economy for a broader audience. And to raise some questions or to keep the dialogue, we have Thomas Røkås from Rethinking Economics, Norway, who also has a master's degree from NMBU, which I don't remember how you say it in English, but he can say it. Yeah, in international environmental studies, and who also he sort of planted the seed of this dialogue. So thank you for that, Thomas, and thank you, Jonas, for joining all the way from Denmark.
Thank you for having me.
Okay, guys. Yeah. Okay. Thank you very much, Jonas, for being here. Looking forward to our conversation.
Mm-hmm.
I just want to make clear to everyone here that I am definitely not an expert in finance, but I'm rather a very curious rethinker that wants to understand more of the monetary and banking system, their foundation, weaknesses, but also strengths, as they have tremendous impact on our society in many different ways. And I believe they are also a key focal point when it comes to solving many of the greatest challenges that we face now today. So I prepared some questions for you, Jonas, and I'm looking forward to your answers, and I hope the rest here also can have some benefit from them. And also I'm looking forward to the Q&A session after the conversation. First of all, I'd like to ask you some questions about the current money and financial system, and then move on to some of the foundations and impacts of these systems, before hearing some of your views on alternative approaches, solutions. So I guess we have all watched the news the last weeks and seen that banks in America, they have collapsed, and others, they are shaking in Europe. Financial experts and commentators, they cannot actually rule out that the current instabilities that we see might lead to a similar crisis like in 2008. So I'm very curious to start off, Jonas, if you can explain to us how a bank, the Silicon Valley Bank, can be ranked by Forbes magazine as one of America's best banks 1 month and then collapse the next month. How is that even possible?
Yeah, that's a good question, and I honestly have no idea how it could be rated one of the best banks by Forbes magazine. It probably has something to do with the fact that they don't have access to they cannot, scrutinize the balance sheets of the banks, so probably they didn't realize, how bad it was in terms of Silicon Valley Bank. So yeah, I don't know how it got rated one of the best banks, but in terms of how the bank collapsed, I think it was multiple different things that coincided and made it collapse. So first and foremost, it's depositor base. So it's customers. Its customers are primarily made out of companies and not retail people, not people like you and I, but companies, Silicon Valley companies. And whereas you say that, you say when it comes to retail depositors, people like you and I, you say that deposits are sticky. There's not that great a chance that we suddenly just withdraw all the money. But that's not necessarily the case with companies, because maybe for whatever reason they have to pay a lot of bills and they don't necessarily have that much income and stuff like that. So companies might end up in a situation where suddenly they need a lot of cash. And that was sort of what happened. Suddenly a lot of these companies, they needed cash. So Silicon Valley Bank needed to process these deposit outflows. But to do that, they need essentially central bank reserves. But what they had done was that they had invested a lot of money into what's it called, securities, treasury securities, so government bonds or government debt. But due to they invested into those like a couple of years ago, but due to the increasing interest rates, the interest rate hikes, the value of the bonds had been decreasing. And the reason for that is simply, to keep it very simple, is that rates and value is negatively correlated. So whenever the interest rate increases, the value of the bonds falls, and conversely, whenever the value increases, the interest rates falls. So, and that was the problem. So essentially, a lot of the assets that the bank held, they decreased in value. And suddenly they tried to sell those bonds to process the deposits outflows, which essentially just collapsed the bank's balance sheet. So you could say, in a sense, a liquidity crisis. It was a liquidity crisis turned into a solvency crisis. But the bank per se was not a solvency crisis per se, because if it had held the bonds to maturity, I don't know if it was 2 years, 5 years, 10 years, 30 years, how much it would be, then there would have been no solvency crisis. So it is a liquidity crisis. And due to that fact, it's also a completely different, the current banking problems you see in the US is of a completely different nature than the one you had 15 years ago, a great financial crisis where it was a solvency crisis. The banks had invested into a lot of shitty assets. That's not the case here. So it is a different form of crisis currently when it comes to Silicon Valley Bank. I hope that made sense.
Yeah, I've heard about this liquidity, solvency. You need those balance sheets to sort of map out or to be stable. But I don't really get the core of it. And as you say, can you sort of explain how does this work? What's like? Can you explain those, this liquidity and solvency and this system that are placed to sort of?
So essentially, when it comes to solvency, it's when you have the assets of the liabilities of the banks. So assets, whatever they own and they have of income, and liabilities, whatever they need to pay out or owe other entities. If the liability side, what they owe is more than what they have or is owned, then there is a solvency problem. Okay, does that make sense?
Yeah.
Okay, then for liquidity, that's more in terms of having the money right here and now. So it might be the case that I have, let's say you owe me $10 million. You're gonna pay me $10 million in 1 month. But right now I owe $10,000 to another entity. I have to pay it today. So even though, it looks very good a week from now, I don't have the money right here, right now to pay you. And that's a liquidity crisis. And that's the problem right now in the US. It's not so much a solvency crisis as it's a liquidity crisis. So they don't have the money to pay what they own right here, right now. Does that make sense?
Yeah.
It is a rather complex topic, and that in and of itself, you could speak about that for probably 2 hours. So.
And I think we're going to come back to some of the maybe, I mean, and how the system now, how is it possible that you can sort of create such a big crisis like you did in 2008? Like, what is this? What is it like core that with today's system that makes such collapse possible in the first place and creates this instability that such collapses represent?
I would actually say in this specific case, but it might turn into something else. But I would say so far the reason why we have these problems are due to first and foremost, you had the inflation, and then central banks think that the only way to counter this inflation, which I very much oppose, is to increase interest rates. So I would say central banks in the first place, they were supposed to be lender of last resort. So essentially, when the banks had a liquidity crisis, they were supposed to help them. They should help them remain liquid. But now, central banks, the narrative surrounding central banks, what they, their task, what they should do, it has sort of changed. So right now, they have a focus on keeping price levels stable, countering inflation, or just keeping the inflation level stable. And because they are so focused on that, it's just like we are going to increase interest rates no matter what the cost might be. So right now, I would say they're in the process of completely ruining the financial system because they are so focused on increasing interest rates. So that's the problem right here. But yeah, I don't know if you want to know.
No, I think we can also talk many hours of interest rates and how it works and not. And I think we have to go to that side. But yeah, thank you. But to keep it a bit general still, when it comes to sort of Norway, and maybe this also includes Denmark, I believe that we, with the system, I believe that we would like to think a bit differently about ourselves and separate us a bit more from the progressive countries like the US, UK, arguing that we have a more regulated financial system. Like the lending conditions are stricter, there's less speculation in the housing market, we have more trust within our society towards our financial institutions and so on. Would you agree that there are some differences in how the banking and financial sectors operates in, for example, the US, Norway, Denmark? And if so, does it matter and how?
Yeah, but actually not necessarily. I think it's, there are differences, certainly, but I think overall it's very much the same beast. It's if you take Denmark, I don't know about Norway, but I think it was 2021. I think Danish banks created approximately 150 billion Danish kroner, which is the equivalent of $20 billion, or $20 billion. I don't know what it is in Norwegian crowns, but they created that much money, and that was a lot of that went into real estate investments or financing of real estate. So whereas and that goes from almost all lending activities, they are directed into speculative investments. They're not directed into let's say productive, small and medium-sized enterprises, green entities or green projects. It's mostly into speculative assets, and that has something to do with regulation, which is more or less not the same, but it's more or less the same everywhere in the Western world. So I would actually say it's probably as bad in Europe and maybe in the Nordics as it is in the UK and US. And also you could also say that in Europe, generally speaking, the banking sector is more consolidated. You have more big banks, which tend to lend to big companies, and you don't have that many small community banks focused on supporting small local startups. The US actually have more of those. So in that sense, I actually think the US banking sector, although they have these major institutions, it's in a sense more decentralized.
But are they operating on sort of very different systems, or are they part of the same sort of mothership? these local banks and the bigger ones? I mean, are
So-
they better, the local banks, if you understand what I mean?
They all guided by the same rules. So you have these thing called, without, it can easily get a bit technical, so I'll just touch the surface of it. But we all guided by these thing called the Basel Accords, which is capital requirements. So you need to have a certain amount of capital, which you lend against. So whenever you make a loan, as like a rule of thumb, you need to have 8% in capital so if you have 8% in capital, that could be like money, but it could also be government bond or anything like that. It could be tons of different things. But if you want to lend, if you have let's say how much, $8 in capital, you could lend out $100. But then there are, or you could create, just to make it clear, you could create $100, not lend $100, but create. So that's sort of the same logic everywhere you go in the world, whether you're in the US, in Italy, or in Norway. Yeah.
Okay. Yeah. We're gonna come back to speculation and also to the housing market, that you said. But Gode Penger and yourself, you represent Gode Penger now. You seem to focus a lot of your critique of the financial system around the way money is produced.
Yeah.
If I'm not mistaken. Yeah. So, but can you map out for us some of the most discussed and applied theories on money production, and make clear to us all which one that you are advocating for?
Yeah, absolutely. So there are like 3 theories of banking, how a bank works. And it's weird that there even should be different theories of that, because at the end of the day, it's something we have created ourselves. So why should it be so difficult to figure out how it works? But apparently it is. So if you read economics textbooks, you most likely would be presented for either the intermediation theory of banking or the reserve theory of banking. And just to briefly describe those 2 theories, when it comes to intermediation theory of banking, it simply says that a banking is sort of an institution which takes, people deposits money into your bank, and you then lend those money out. There hasn't been created any money in the process, so it's simply just facilitating, the contact between lender and borrower. So that's what banks do, according to that theory. Then there is the reserve theory of banking, which says that banks create money whenever they lend out money, but they do so based on reserves. So it's also called the money multiplier. So if you have $10, then you can multiply those $10 up to if someone goes to the bank, hands in $10, then the bank would keep, let's say, $1 and then lend out, they would, actually, I can't remember how it goes right now, but okay, so essentially they could lend out like, how's it going? Okay, so essentially the logic of it is that it simply multiplies the amount of money. So if it has $10, then it could create another some money on top of that. So it could, I don't know why I cannot remember.
Yeah,
the logic.
I'm also struggling precisely too, but it's you just produce a fraction of the sort of money that you put into the bank, but there's a very minimal amount of money being produced in this way. I guess it's the logic.
Yeah, exactly. Yeah. So the banks, according to that, create money based on reserves. So that's the second theory, and it's most likely one of those 2 you encounter whenever you open a textbook, economics. And then there is the third one, which is the credit theory of banking, which essentially says that money creates money, banks create money based on they don't need reserves to create money. They don't need to have money to create more money. They simply create money out of thin air, so to speak. it's a bit contested, the saying that it creates money out of thin air, but just to make it clear to you, so banks don't need any money beforehand before they can lend money out. It's a lot more complicated than that, but just to keep it simple. So that's the third theory of banking. So if you take Denmark, it's the same in Norway. All the money you have, the money supply, it's created by private banks. Whenever you go down to the bank, ask for a loan to buy a house, the money creates, or the bank creates money out of nothing. So that's how banks work, and it's on the basis of that logic, that theory that Godepenge operates.
And I mean, it's not a conspiracy theory. I mean, the Bank of England has went out in an article 2012 saying this theory is valid. I mean, money is created by private banks.
Yeah.
Many national banks are saying the same thing. So it's very curious that we don't hear more about it. I was shocked when I heard about it first time. I mean, it's
yeah, it is quite interesting. Also, since then, I think until the before the financial crisis, it would have been a quite controversial statement to say that money creates, or banks create money. And I also think when Godepenge started, like almost 10 years ago, it was also really controversial. But since then, you have had the Bank of England, also the Danish central bank, Nationalbanken, has also said the same thing. You have Bundesbanken, you have, everyone agrees that that's the way it works, but still you have economic textbooks saying that's not how it works. So that's a bit weird, but yeah.
And I guess, I mean, the reality is somewhere in between. I guess not one of them are sort of correct or wrong. I think you have some gradient. I think it's hard. I'm not sure, but let's say that we take this credit creation theory that Godepenge advocates for very seriously, and what implications does this have for like other financial activities like asset management, or like you mentioned, housing market? Like what does this do?
So the thing is that banks, it partly has something to do with the fact that they are entities focusing on making money, profiting, but also due to regulation. But the thing is that whenever they extend loans, whenever they create money, it's mostly for the buying of already existing assets, such as houses, but it could also be shares or tons of different things. But because one of the things is, for example, whenever you buy you get a mortgage for buying a house, you pledge the house as collateral. So if by some reason you were not to pay back your mortgage, the bank is just gonna say, oh, we're gonna take your house then and then sell it. So in some way they're gonna get the money, or at least so they think. But that essentially means that a lot of the money that is being created goes into already existing assets, and that creates an asset price inflation. So asset prices, they are increasing and increasing parallel to money being printed. So the thing is that right now you have, the speculative part of the markets, assets, they're doing very well. But then on the other hand, you have productive economy, small and medium-sized enterprises. You have green financing, which they also to some extent have a hard time. So there's all of these parts of the economy that actually would contribute to the well-being of society, to nature, to people, which they lack funding. Banks, at least from my perspective, that should be the role of banks, to support the well-being of the society. But right now it's just like a casino. They just all the money, or a lot of the money, goes into buying of existing assets, creating, it benefits those who already own assets, such as houses. Yeah.
So the rich and powerful, and so how do you know the development the last decades of sort of the size of the real economy compared to the finance economy, or the sort of asset economy, or the
no, but you can see something, for example, if you take in Denmark, I think if you go 30 years back, income for 10 years, you could buy property. Right now, I think it's something like 30, 35 years. You need to you work for 30, 35 years to buy property. Because the productive economy and the wages has not followed along with the increasing housing prices.
So relatively, the more money is sort of placed in property or in very valuable sort of asset instead of being in the real economy, right?
Yeah, exactly. So that's at least one way to actually see it. See the actual real effects on the economy. You could also see the Gulpinge have made like graphs showing the money printing activity, and it perfectly correlates with the housing prices. So there you have a real example. And then meanwhile, consumer prices has remained pretty much stagnant. Yeah.
Thank you. So I want to ask you, so I come from the sustainability side, and more broadly, what implications does this current way of producing money, or this current way or finance system, what does it have on sustainability or on development, would you say?
Yeah, so it's, I would say, so there are two ways to look at it. On the one hand, it does, we just had a case with Danske Bank, which is the biggest bank, the biggest bank in Denmark. They have been lending money to fossil fuel companies, creating new projects in the Arctic or where it was. I'm not sure, but that's in that sense, it does have a actual negative impact on the environment. So that's one way to see it, directing money into brown or black assets. That's one way. And then on the other hand, you can see there is a lack of green financing. So I don't think our financial institutions in general, they are not the ones, at least as it is today, they're not the ones to help us or create a more sustainable future, because they are guided by profit. And as long as it's not necessarily profitable to invest into green projects, then they don't do it. If it's more lucrative for them to invest into fossil fuel companies, then they do that. So that's sort of the where we are today. I would say that it's not sufficiently green.
But I mean, you hear always it's said that we need to invest a lot in green. We need to produce money. We need to or maybe produce money to sort of achieve the SDGs, to produce this new, have more capital into what is sustainable. And do we need that to sort of to manage the green transitions that needed? Or
yeah, absolutely, it does. For the green revolution to happen, it does require money. And sort of the paradox right now is that if you have the housing market in Denmark, the banks are allowed to create, I don't know how much money, let's say that to create just $50 billion, or sorry, not $50 billion, Danish kroner, for buying of already existing properties in Denmark. There is 50 million kroners annually. It's not necessarily the number, but let's just go with that. Is being created for speculative purposes. But at the same time, you have politicians arguing about, where should the money come from? We don't have 1 billion Danish kroner to support green, stuff, and it just doesn't make any sense. It's really counterproductive, all the narratives. As soon as the state creates money, it's supposed to be inflationary. Inflation is going to run amok. We're all doomed if the state creates money. But the banks, it's all good if they do it for speculative purposes. And I think that's a flawed logic.
Thank you. So we talked a bit about the system now and some of its flaws, your views on its flaws. So Gode Penge, they make the case for a more democratic money system and a more regulated production of money to prevent financial instability and crisis in the future.
Yeah.
Can you map out for us how such a democratic project could look like, and which tools and policies that could support such a project?
Yeah, so in this context, I would also like to emphasize that, it's the first thing is simply to recognize that the financial system is of importance when it comes to the green transformation, when it comes to financial instability, of course, but also inequality and a lot of things that actually it does impact our society in a negative way. That's where we start, and then afterwards we can start discussing how to then make a better monetary and banking system. And even within Gode Penge, we just to some extent disagree on some parts. We agree on a lot of things, but how the monetary system ideally should look like, we don't necessarily all agree on. There are lots of different theories, but we overall are very much agree on the same stuff. So just to give you one example of how it could look like, it could be that instead of the private banks creating money, it would be the state, or rather the central bank should decide how much money should be printed this year. And then the politicians should be allowed to guide those newly created money into the economy through government fiscal policies. So it could be that you want to create some green project. It could be that you want to create a new school or something like that. I don't know. It's up to democracy to decide where the money should be directed. So in that sense, you take the control back from the banks to create money and hand it over to the government and the central bank. That's one way. That's one way you could have a more democratic system, monetary system. But it could also be, there are lots of less radical proposals as to how you could create a more democratic and just system. It could be that maybe 50 years ago, it was not that unconventional to use credit guidance, where you simply told the banks you have to. Let's say it could be that you have to lend out this and that much money to this sector. It could be for green financing, or it could be that you could lend out a max of I don't know 10 billion Danish kroner to financing of properties. So in that way you can sort of direct the credit, newly created money into different sectors. So that's also a way you could do it. And you can also do it through different incentive programs where you make it more profitable for banks to lend to green projects and stuff like that. So I would say there is probably 20 different good reforms that I know of, or something like that, which could help create a more democratic, sustainable and just monetary and banking system. But this was just, to give you a few examples.
Thank you. I'm very curious about hearing more. I see that the time is running a little bit, but I'm going to challenge a little bit about the reformist approach regarding money production. Just a little bit. So according to this guy, Richard Werner, you probably know him. He's studied the credit creation theory for decades, and he argued that the understanding of banks as creators and allocators of money supply should be harnessed to benefit humanity in general and ordinary people in particular, instead of sort of abolishing this power and further centralizing the power of money creation in the hands of a few people, such as the national bank, as you say. Do you find this critique reasonable? Like he's arguing a lot for like local banks producing as much money they can, for example, to sort of cover local needs.
I very much like the idea of having more community-centered banks, because they tend to, much bigger degree to have a focus on the community, the local community, instead of making investments into Shell or BP or some other big company that is destroying the planet. So I think in that sense, yeah, absolutely. I think community banks is a really good solution to a lot of the problems. It doesn't solve all the problems, but I think it would be an important step to a much more democratic banking system. So and that's also, again, that would also, if you take the Gode Penge solution I mentioned before, one of the key critiques of that would be that you centralizes the power of money. So and that becomes I would say to some extent a moral hazard, or so there might be some politicians and central bankers that in the future, if we had a monetary system like that, would come together and then just use the monetary system for their own benefit. So that it creates some potential problems, which I do share Richard Werner's fears in that regard, but I don't agree with all he's saying. But yeah.
So before we open the Q&A, I just want to have a final question for you, Jonas. So hopefully it's a positive answer, but I want to ask you whether you feel around you some of these alternative ways of thinking, theorizing, envisioning future financial systems, if they are gaining any momentum in society around you. Do you feel that?
So that's a good question, because just recently I discussed that with one of my friends who's very much into also economics, and I said that it felt like that it was gaining momentum, but he said no, that's not the case, not at all. So I think it's more a symptom of me being in an echo chamber on Twitter and friends and stuff like that. So to me, it feels like, oh, all these cool stuff is happening. But in reality, I don't necessarily think that's the case. But I do think, however, that there has been a bit of a tendency to be a bit more critical towards the mainstream explanation of how money and banking and all of these things function, and I think people has become a bit more open to it. It happens slowly but steady. So I do think there is a positive tendency, but yeah.
Thank you very much. I think we will open up for questions. Anna, will you take charge, or should I? Or yeah. We have a chat in the chat there first from Tora. But then the purpose of such community banks would probably be something else than growth. Yeah, that's. Do you want to elaborate, Tora, or I'm just gonna say that we are recording, so if you don't, maybe we can turn it off. Or is it good to have the Q&A also in the? We will have it on, and let us know if you don't want to be recorded. Tora?
Yeah, I was just thinking because there's a lot of different views on this, of course, but I mean, like moving the focus or the money creation from normal banks or whatever you call them over to the central bank is more. Then the idea behind that could be that, okay, so the central bank would take more care of the community as a whole, the same way that a community bank would also think maybe more about the community and not so much about profits. So I guess like the idea behind both those, even though central banks is more a central solution, while community banks is a more of a decentralized solution, is like it seemed to go more in the same direction. So it's more like a comment, I guess. Yeah,
I absolutely agree. And yeah, I also think that today it is sort of the problem to a large extent that it's monetary production happens with the intention of profiting, and I think in both the central bank case and community banks, they're much more focusing on just society as a whole, and also you could have with the community banks where they are governed and owned by the community. So if there are any profits, it's just going to fall back into the community. So, yeah.
Thank you, Tora and Jonas. Jessica, you have your hand up.
Yes, I do. Just going back to the start of the of what you were talking about, that that inflation usually then creates a financial crisis. I sort of have two questions to this, because what is it that starts the inflation to begin with, and what were the other mechanisms apart from raising interest rates that can be used to lower inflation again?
Yeah. Okay. So first and foremost, I don't. So I didn't mean to say that inflation drives financial crisis. It's more that in this specific case, financial crisis, or sorry, the inflation led central banks to increase the interest rate, which then caused the liquidity crisis that we spoke about in the beginning. So I don't know, I wouldn't say that, you know, as a rule of thumb, or just generally speaking, that interest or inflation creates.
Ababoye also states the same thing in her recent article, that the like modern financial crisis, it has the same pattern as we see right now, that the interest rate has been low for a very long time, inflation starts going up, and then the interest rate goes up, and the next thing to follow is a financial crisis. Yeah.
Exactly. But in regards to what then drives inflation, I think there has been a change in the narrative. So there's been this woman from I think she's from Germany, Isabella Weber, I think she's called, but she has been a big she's made a major burst towards the idea that inflation is actually being driven to a large extent, at least, by greedy companies increasing, you know, profits, increasing prices, and increasing profits. And right now you have, I think even the European Central Bank actually, they actually reiterated that idea today or yesterday or something like that. So I think right now the narrative is changing from, you know, wages. You know, you probably heard about the fear of wage spirals, that increasing wages creates inflation. But right now it seems like it's changing towards that it's actually greedy companies driving the inflation. And yeah, so whenever you raise interest rates from central bank perspective, I'm not convinced at all that's gonna solve the problem. It's just gonna it's probably gonna be like this. They're gonna keep increasing interest rates until they reach a point where the economy collapses, and then they're gonna clap their hands and say, "Oh, we did it." But I don't think that's a good solution to the problem. There's also been a lot of indications that the inflation crisis has been driven by supply side problems. So problems in the supply chains and stuff like that. And if you want to solve that, it's much better to have you know, fiscal policies specifically targeting those sectors which have problems in supply chains to you know, stimulate productivity or create new businesses or stuff like that. That's much more helpful to actually lower inflation than simply increasing interest rates. I don't see how increasing interest rates is going to solve anything.
Anyone else have any questions?
Thank you.
I have one, but I don't know how to raise my hand. I can't see that on the screen.
No worries.
Maybe it's interesting. Thanks, by the way, Jonas, for your introduction. And it's rather complicated, this thing. But I've been, as you see my gray hair here on the screen, I've been in banking, started like 1975, and I think I've seen about 4 or 5 financial crises. Everything from starting out in Latin America, the Asian crisis, the Russian crisis, etc., etc., the dot-com crisis, the financial crisis 13 years ago, and now this that may, well, the jury is out on that, grow into a big crisis. And it has all been centered around debt, whether it be Latin American countries buried in petrodollar debt, whether it be in Asia, And the last crisis in 2008 and 9, American housing loan, and all the plays around it with derivatives and say what did weapons or financial weapons of mass destruction, somebody called it. And this debt, growth of debt is also very much stimulated by low interest rates. If you see what you call the asset inflation over the last years, of course, when you have zero interest rates, what do? You invest in something, and real estate seems to many a good idea. And there you have the overflow of investment into real estate. And what the big danger now is that this balloon will burst, because you had in 2008 you had the American housing market and other markets too being overextended. Now you also have overextended markets, and you see the reaction of the authorities. They're deadly scared of this balloon bursting, because you have enough problems in the world, if not the financial crisis in addition. And of course the central banks are playing a very, very dangerous game in trying to contain inflation just with hiking interest rates. But that's in fact their only weapon. It has come too far. And they're very hard to talk into reason, say, in this. I see you're opposed to the policy of just raising interest rates, but that's about the only thing they can do. So you say that, okay, inflation can maybe contained in other ways, but you have a big mountain of debt that needs to be reduced over time, and that is really the.
I fully agree with everything you're saying, and it's actually quite nice that you're pointing this out, because that's probably that's like the crux of it all. The problem is debt. And that's also it's closely tied to money creation, the way we create money today. So every time you go down to a bank, you might get $1 million, but you also similarly get a debt of $1 million. And the more debt you have in the private economy, the more fragile it becomes. So if you come to suddenly when and that's also sort of the problem right now. You have a lot of debt, but then if you increase interest rates, then maybe at some point it will become more expensive to refinance or pay off that debt. And then suddenly, if you cannot repay your debt, you cannot pay interest and all of these things because the debt is so high, then the domino, it's like a domino effect where, then if the borrowers cannot pay back the debt, banks are going to go bankrupt because they lose all of their income, their assets, and all of these things. So that is really, really important to understand when you want to understand financial crisis. And also, I agree with the things you're saying in terms of interest rates hikes. It's like the central banks have brought themselves in a very tough situation right now, where it's hard to do much. But I would say, I don't understand why there's such a great fear for inflation. So maybe just chill with the interest rates hikes and then but I agree with all of it.
Tora, do you have another question?
I thought it was really, really cool that Lars brought up this topic about debt, because of course it's crucial, and it also made me think about okay, so we haven't really touched upon it yet, but this is so much linked to questioning the idea about growth, right? So growth in general and how our system works. And okay, so if we have this increasing debt, which continues and continues and continues, okay, so when do we reach that level that the debt outgrows the real value, right? The real value creation that we have in the world? And maybe that won't happen, but still, okay, so we need to see this together with sustainability too. So No, it's a super interesting topic and super complex and very hard to solve. But then at the same time, I think it's important to bring it back down, because talking to people working in finance today and banking today, they want to find solutions, but it's not very easy to get a reform to take place, right? So maybe it happens after a crisis, but we had a COVID crisis, so why didn't anything happen then? Yes, it was not a banking crisis, but what kind of crisis do we need for the system to actually see this reform or transformation go through? I don't know.
Yeah, fully agree. But yeah, so just a couple of comments. So in terms of that, there is actually a few options to reduce that. I know people like I think it's Michael Hodson, Steve Keen, David Graeber. They are proponents of debt jubilees, where it could be that you pay out helicopter money, as it's called, to you know, you and I and all of us right here, and then we either use that money, let's say it's 100,000 euros, you use that money to pay back your debt, and if you don't do that, you invest it into companies who then are supposed to pay back their debt, and so on. So in that way, you reduce the amount of debt in society without actually increasing the money supply. So that's one way you could do it. Debt jubilees, it's called, if you want to look into that. And then the other thing you mentioned about you know, debt fueling I would say a growth imperative. I think Jason Hegel, if you're familiar with him, he also mentions the same thing. But I think that logic is sort of flawed. It's more, if you see it from an accounting perspective, you can actually see how the money, it has something to do with, let's say I borrow $100, but I don't borrow enough money to pay back the interest. I might owe the bank $110, but they only owed me $100. So how I'm going to pay them back? But the thing is, I'm going to, you know, pay the bank money. They're going to pay back. They're going to pay out that money in the form of profit, or to investors, or to their workers, who's then going to spend it back into the economy. So you can actually use those money to pay back all the debt plus interest. It's a complicated topic, so you probably didn't understand any of that. So sorry about that. It's but yeah. It's a big discussion and very, very complex.
Thank you. Rob? Rob, do you have a question? Do you have your
Yeah. Can you hear me?
Yeah.
I think you've answered a bit, I guess, timely, more than the solutions, I guess, in the debt crisis. But I guess what do you see as the most likely solutions that could impact the industry that are sort of on the horizon or being explored? Because I guess like capitalism is built on artificial scarcity and debt, and you can't have infinite growth without sort of hitting boundaries, and then that boom and bust cycle is gonna kind of, maybe that's how the system recalibrates. And I guess like a debt jubilee is like another recalibration. And I don't know, you've got how many trillions of dollars pumped into the global economy during COVID? Like, how do you, where does that like find its balance? But yeah, I guess mostly I'm interested in like, what do you think is interesting happening right now?
In terms of alternative models, how you could, you know, design a monetary system, or what do you mean?
Yeah, like who's doing stuff that you think is pushing the boundaries and creating like interesting ripples, or like, are there anyone out there that you think is kind of like facilitating alternatives in interesting ways?
Actually, not really. There are lots of academics and organizations working for it, but in terms of actual implementations of it in a country anywhere in the world, not that I know of, unfortunately. I would love that to be the case, but I actually don't know of any where I think that's really interesting what they have going on, unfortunately.
But could there be like an issue of like it being very small community-based local initiatives that just don't have like buy-in? Sorry about the background.
Yeah. So community banks, I think that's very, very cool. But the thing is that, you know, almost everywhere in the world, community banks are dying and big banks are becoming bigger. So there's sort of the opposite tendency, unfortunately.
That's what Lars also commented in the chat here, that small community banks need more capital in small banks. So they are squeezed out or forced to merge, example in Norway.
Yeah.
So,
exactly, and that has something to do with what's called risk-based capital requirements. It's the same thing here in Denmark and everywhere. It can become, or it is harder for small banks to operate their business, and that partly has something to do, at least from my perspective, from you know how they're regulated. So big banks, what's called systemic important financial institutions, they are allowed to have their own risk models. They can do that internally. They can decide, you know, how much capital they need to have relative to loans, and they do that based on their own risk model. So it allows them to sort of game the system. They can use it for their own benefit. Small banks cannot do that. So yeah, I think that's completely true. So it also has something to do with regulation. The regulation is not that good, and also the regulation is built for financial stability, but it's not built for creating a better society. It's not creating having more community banks. It's not created for funding green projects. All of these things. It's only built for financial stability, which, yeah, is kind of stupid, I think.
I think that's something we've seen in Norway with the biggest bank in Norway recently bought up one of the competitors using like the global competition as a sort of like reasoning, I guess.
Yeah.
And then obviously the smaller banks don't have any chance. But like, is there anything like regulation wise, like when you're looking at the ESG taxonomy, things coming from Europe, like anything there that you think is kind of like sparks of hope for the system that we have?
There is something like the ECB has this thing called targeted long-term refinancing operations, but again, it becomes quite technical. But essentially, they can actually direct or stimulate lending activities to specific sectors. But currently, they don't use it for green finance. They only use it for funding of small and medium-sized enterprises, I think. And also there's also some things regarding the taxonomy, the way it's being implemented. It's by far from ideal, but you know that could be an instrument which could be used to nudge banks in the right directions.
I'm just gonna, Jonas, we said that it's gonna last to 8. Now it's 8:04. Are you busy, or do you want a couple of more questions, Jonas?
Yeah, I'm not busy.
Okay.
Yeah, so
then we will keep on going some more minutes then, if people are okay with that. And I will take up Rob on. I also want some tools, some solutions, some new ones, and I see this emerging digital national money, like digital, how do you call it? Digital reserves.
Central bank digital currency.
Yes, digital central bank reserves. And is that the potential tool to sort of, if you can get more of the total money supply over to sort of these controlled money instead of speculative money, is that a potential way to go?
Yeah, I think so, potentially, but I don't think that's not how central banks are gonna implement it. So Gode Penge has actually, they were one of the, I would say they were actually quite influential in that debate from early on, back in maybe 2015-16, and has to some degree, I would say, influenced the debate. But you know, it has become a completely different thing. So back then, Gode Penge wanted it to be compete with the banks, an alternative option, and where let's say instead of having an account at a private bank, you would have an account at the central bank. But that's not how central banks are going to implement it. It's going to be a addition, a supplement to the current system, but it's not going to compete with it. So it's just like, it's going to be like cash, but in a digital form. So I wouldn't say it's not going to change too much. It potentially could, but I don't think that that's the case.
Thank you. I see we have another question in the chat from Anna Marte Divi. I will read it up. Have money over time changed as a concept? We talk about it as a produce, as something, but it used to be a means? Question mark.
Yeah. So is it like within the last 100 years or within the last 5,000 years or because okay, that's okay, nice. But yeah. So money has taken a lot of different forms. I would say back then it was mostly issued by kings or yeah. So it private banks, it was something that developed later on, probably 1500 BC or after Christ. 500 years ago. So back then it was a different form of money, and even then you have had lots of different forms of money. You used this thing called tally sticks, which was like you had a creditor debitor, and it was like, it wasn't money, it was like just tree or whatever it was, and then you cut it in two, and then debitor had one and creditor had one, and that was a form of money. It could circulate in the economy. So there's been lots of different forms of money, so that's like a very quick question, but there is a lot of good literature on all the different forms of money that have been.
Philosophical.
Also philosophical. There's So if you want to if you want me to recommend any books on that, or just in general, feel free to write me.
I'm reading now David Graeber's book, Depths. I think. It's quite heavy in English. It's quite big, but he has very interesting thoughts on money and.
There's quite a lot of information in that one, so I think there's a lot to take in.
I recommend this one.
Yeah, he has a good account of the different forms of money throughout the different 5,000 years. 5,000 years, I did. Yeah.
Many different perspectives. So
absolutely. And also
I'm not saying he's the right or anything, but he has some.
I think it's good. I like that. Yeah.
Do you have any insights into why central banks are not interested in hosting private accounts?
So it does have something to do with the fact that they're not interested in competing with private banks, or you could say, what they're doing with central bank digital currencies is to issue a form of money, which is a claim against the central bank and not the private bank. But they probably gonna impose some limit, so you could max have 1,000 euros in your in central bank digital currencies, something like that. So that way there's not going to be a flight from private banks to the central bank. It simply has something to do with the fact that they don't want to compete with private banks.
I see that Lars also have a suggestion. Try Brett Scott Cloud Money. I don't know.
I haven't read it yet, but I've heard a lot of good things about it. So Brett Scott is, I think it's a bit more of an anthropological view. Correct me if I'm wrong.
He's close to David Graeber's line of thought. Very realistic view on money, and very critical to the crypto money, for instance. I mean, that's interesting, which he regards as a commodity, as a pure commodity. It's not money really; it's something else. And another recommendation, there is a very good legal discussion on money and capital by Katarina Pistor from Columbia University.
Yeah, also very good.
Called the Code of Capital. It's been translated, at least to French, German. It's a big hit these days, and especially in regard of the banking crisis we see. Very, very sane thoughts on what's happening.
Yeah,
and the legal aspect shouldn't be forgotten here. It's important.
Exactly. That's quite interesting. So that's like capitalism from a legal standpoint, and how you it's really interesting.
Because the lawmakers, they don't get it. I mean, that's my view after 30 years or 40 years in banking. They simply don't get it. I mean, they try to mend the system that is not functioning. And then you have these recurring crises, say even at shorter intervals also. Building of huge debt mountains, and then the crack, and then the next crisis.
Yeah.
So, well, I talk too much now, but it's really interesting. I hope that Rethinking will follow up and give us some more time to discuss.
Yeah, I will try to keep this subject warm. And if you could, yeah, there you go, Katarina. Thank you, Lars. Lars, are you still the bank chief of Cultura Bank?
Oh no, I mean, I'm retired since 6-7 years, I think. So I still keep track of them. But it's interesting. I mean, the dream of a community of the good bank, but the good banks in Europe, like Triodos Bank, Merkur Bank, GLS in Germany, etc., they're so small still. They're like a regional bank in Norway in size, even the biggest of them. And that's really something to think about. Why aren't these banks allowed to grow? Or why don't they grow? Because I think the whole system favors the big banks. That's all they do. It's a sad story, really.
I think we should try to end it now, or we. Do you want a last question from Amir, Jonas, and then we try to end it?
Yeah.
What is your view? Or should I read it up? Or
yeah, feel free to do so.
Oh, I'm not very. What is your view about the U.S. debts, being the debt in dollars, and in view of the current politics?
So I don't know if it refers to sort of the national or the public debt. So I don't think it's that much of a problem. In the end, they could pay back. I would say, they could simply. It's not going to spiral out of control. They could always pay back the debt if they wanted to by simply, typing in some numbers in the central bank. The central bank could type in some numbers in an account. And then, so there's a lot of fear about the public debt in the U.S. spiraling out of control, but I don't see that's ever gonna happen. But that's just my view. I know there's a lot of different views on that. Yeah, and it could also refer to the fact that most debt in the world, like the dollar, is the global reserve currency. Which I think is gonna continue to be like that at least for a decade, but maybe it's gonna change. I don't know. It's so extremely complex, and people disagree so much on these things.
It's like I don't remember the saying right now, but you don't ask the fish about water, right? It's like this bond is everywhere, it's in everything, but we don't really understand it completely or at all. So. I think on that note, I think we'll try to end it off. First of all, thank you so much, Jonas, for all of your insights and knowledge, and very nice way of explaining stuff for people that don't know everything. And thank you very much to Rethinking Economics, Anna, for setting this up, and for Gode Penge, of course, the organization you represent, Jonas. We recommend all of you to check out Gode Penge and Rethinking Economics Norway's web pages. And maybe if you want to become a member, please do. And thank all of you that you were here asking questions. We hope this debate is going to continue, and that we see some good solutions on the financial issues that we see. So with that, thank you very much, and have a good night, everyone.
See you guys.
Thanks.